investment firm Jefferies is urging clients to buy Indian stocks despite mounting tariff pressures from the Trump administration, with strategist Christopher Wood arguing that the current challenges present a compelling buying opportunity rather than a reason to retreat from the market. In his widely followed Greed and Fear newsletter published Sunday, Wood said it is only a matter of time before Trump backs off the stance, which is not in America's interest. The recommendation comes as India faces the prospect of 50% tariffs on most exports to the United States, following a series of trade actions that began in early August. The escalating trade dispute intensified when Trump announced a 25% tariff on Indian goods on July 30th, citing India's purchases of Russian military equipment and energy. A second 25% tariff was imposed on August 6th over Indian crude oil imports from Russia, bringing the total potential tariff burden to 50% by August 27. According to ClearTax, the tariffs target approximately 55% of India's $87 billion in annual exports to the US, with exemptions only for pharmaceuticals, semiconductors, and energy resources. The measures represent the highest tariffs imposed on any US trading partner, surpassing those on China, 30%, and Vietnam, 20%. Despite the tariff headwinds, Wood maintains that India represents the best long-term structural story in Asia. The country has experienced significant underperformance over the past year, with the MSCI India Index trailing the MSCI Emerging Markets Index by 24 percentage points. Since mid-April alone, Indian equities have lagged by 18 percentage points. This underperformance has brought valuations down from their peaks. Indian equities are currently trading at 20.2 times one-year forward earnings, compared to 22.4 times at their October 2021 high. Wood attributes the weakness partly to stretched valuations and record equity supply that hit $10.4 billion in June. Wood suggested that Trump's aggressive stance could accelerate efforts by BRICS nations toward de-dollarization, potentially weakening reliance on the US dollar for international trade. He noted that BRICS countries are reuniting primarily due to the lack of a conceptual framework in the US administration's foreign policy. The strategist emphasized that Jefferies maintains a marginal overweight stance on India